Hey everybody, welcome back to the channel. We are back on a new episode of Daily Palantir, and on today's show, I want to talk about Palantir growth expectations for 2025. I've been thinking for the past, honestly, 4 weeks now about how Palantir is going to grow in 2025, how much I think they can grow, how much I want them to grow, and what foundational elements are going to be necessary in order for Palantir to capitalize on to grow to the levels that I think they can get to. Yesterday, after the bell, we got the Q4 earnings date. It'll be February 3rd. I'll be here on the stream covering it as always. And it's going to be one of the most important earnings. And we'll talk about why it's going to be one of the most important earnings. But in general, this episode, I want to discuss less about my earnings expectations. We'll talk more about that as we get closer to the date in terms of numbers, government growth, commercial growth, customer growth, etc. I want to spend the next 15 minutes talking about a certain number I have in mind that I think Palantir can get to. And I think there's some ways they can get to it. It's not going to be easy. It's going to take some time. But if they can get to it, then I think the street's going to be very impressed. I think we will be able to justify the current valuation we are, if not expand that valuation. And I think it's going to allow Palantir to have the numbers to live up to what everyone thinks they are, which is one of the world's most important AI software companies. Let's get into it. So I wrote about this yesterday in my Daily Palantir newsletter, dailypalantir.substack.com. It's free to subscribe if you want to get the written version of some of these videos that I put out. And I kind of talked about this theory I've been having over the past couple of weeks around how much growth Palantir needs to justify its current valuation. Now, if you've been watching the channel for a while, if you've been a Palantir bull for a while, you know that Palantir, which is currently up 1% today, was actually up a lot more. And then the market's kind of dumping as we get into the close right here. At 65 bucks, it's trading at a 331 PE, 56 times price to sales. It's obviously trading ahead of pretty much all of its peers in the software sector. And that's primarily because a lot of those peers can't live up to what Palantir is doing from a qualitative technological perspective. Those are good companies. They're not bad companies. They're just not Palantir. And based on the UBS report we talked about, based on the Morgan Stanley report we talked about, based on the Bank of America report we talked about a couple months ago, there is a differentiated moat that Palantir has, which at least UBS said a couple weeks ago, demands a material premium compared to their software peers, given how strong that moat is. Now, having said that, that is still a story. It's a qualitative story, and it's a story that makes sense, but it's a story that needs to be backed up by the numbers. At the end of the day, NVIDIA, Tesla, Amazon, all these amazing companies did not get to the valuation they got to without showing the growth. In the stock market, particularly with US growth tech companies, you've got to grow. You've got to be able to show the growth. If you can't show the growth, then everyone starts thinking that it's not really a company that should have a 30, 40, 50 times premium attached to it because you're paying for future growth. That's the whole point of a price to earnings multiple. You're paying for earnings going into the future. Having said that, Palantir got to 30% growth in Q3. Very, very important. They're still under 30% on a trailing 12 months basis. But the fact that they got to 30% after about 2.5 years of hitting that number was a big deal. And that is why the street acted accordingly. And then you had S&P inclusion, NASDAQ. You had all this stuff happen that really allowed Palantir to be the best performing stock of the S&P 500 in 2024. We took about a 17% haircut since we got to that 84 level on Palantir. And it makes sense. Obviously, the multiple got extended. Nothing really changed in the earnings. So, in general, January, people tend to take profits. I don't think that's that big of a deal. What I'm more concerned about is, can we maintain where we're at right now and expand the multiple? And the only way to do that, it's not going to be a fancy story. It's not going to be getting into some new ETF because we're in the S&P and the NASDAQ. I mean, those are the biggest ones that you can possibly get into. Now it's going to be about showing the growth. And my belief is that in 2025, by the end of the year, I think Palantir can get to 40% growth. It might not be 40% in 2025, meaning for the full year. It might be one quarter in Q3, Q4 where they get to 40% and then you start seeing that upward swing. Or it might be on February 3rd when they announce guidance saying that they're guiding for 40%. Now, look, I am not going to say that Palantir is going to guide for 40% growth in fiscal year 2025. And the real reason for that is because they tend to sandbag. Like, Palantir is actually really good at sandbagging, and this is the game. You have to play with Wall Street. You have to lower the expectations because all of this earnings volatility is primarily based on, like, do you beat the expectation? Well, what's the expectation? If the expectation is too high and you do really good, but you don't beat, you dump. And it's just the games of Wall Street. So I don't think they're going to guide for 40%. I do believe they will guide for higher than 30%. I think it will be a bit tough for the street to reconcile Palantir not growing above 30%, especially given all the momentum and excitement that exists beyond the company right now. Having said that, I think they can get to 40% at some point in 2025. And here is the way that I think they can get there. And here's kind of my thesis on how it plays out. So let's start with some of the core things I'm thinking of. First of all, new catalysts and tailwinds for the government business. The government business expanded really nicely in Q3, and I think it can continue to expand going into Q4, particularly because we saw the renewal of the Army Vantage contract for $619 million, 4 years, $400 million, with an additional ceiling of potentially getting up to $619 million. That's amazing. So we have that Army Vantage contract till 2028. By the way, for those that don't know about Vantage, we save the Army $4 billion in the words of the Army. They put out a press release a year ago saying how vital Vantage was. So incredibly important piece of software. It was nice to get that renewal, and I think that's really important. Then you have Doge, which we talked about in the past, and I'm going to do a video on that in the future, but I think there are links between the government becoming more efficient, having JD Vance and David Sachs in the White House to establish a software precedent to be able to get companies that can actually fix things, aka Palantir, into the White House, and that should lead to increased growth. And then in general, I think the government will be doing increased spend on AI and software with new partnerships to create more joint contracts. We heard about Palantir and Andor working together with SpaceX. I'll talk about that in another video coming up this week. But in general, I think the government business should help us get to that 40% growth if you assume that 40% growth is possible. So my first thesis on how do we get to 40% growth, I think it's the government business. Now, my second thesis revolves around AIP monetization. I think AIP monetization is just beginning. And the reason I think it's just beginning is because we only have 600 something commercial customers. Like, this is a very, very nascent industry that we are getting into in terms of our ability to implement artificial intelligence into these companies via AIP and Foundry. And it's going to take time, but 600 customers is nothing. Like, there are software companies that have 10,000 customers, right? Palantir is getting some of the best companies in the world to sign multi-year, multi-tens of millions of dollars contracts with them. But once we actually scale and expand, 600 is going to look like a drop in the bucket. So because of that, I think AIP monetization is just beginning. Palantir is in the very early stage of getting customers onto their ecosystem, and given what we know about how sticky it is, and we can see this in net dollar retention trending up, so it's not just a subjective belief that it's sticky. We see in NDR, which went up to, I think, 118% in Q3, and it rebounded from a bottom of like 107%. We know that customers are willing to pay more, and they're willing to be upsold on things that can actually benefit them in their enterprise. I think customer count by the end of 2025, or at least over the next 18 months, is at the 800 to 1,000 mark. And I think we kind of have to get there, right? We have to get over 1,000 customers. I think psychologically that's going to be very important for Palantir. And once they really begin to scale, which we don't know when that's going to happen, but let's say they go downstream to the mom and pop store that can pay, I don't know, $500 a month for using Foundry for the restaurant. That is more customers. They're not going to be worth as much, but that is a lot more scale. And if you introduce AIP to those customers and you have a pay by consumption model, there is a world where Palantir can scale aggressively. And so from a customer perspective, I do think that is another part of the thesis for how we can get to 40% revenue growth. My third thesis on how Palantir gets to 40% revenue growth, their media coverage to me is a compounding effect, not only on the stock as more investors get interested, obviously, because more investors hear about the company, but also for customers. I think the more their name is pitched as the AI operating system, the more Palantir's inbound, meaning customers that call them to try to get sold versus Palantir reaching out to other customers, is likely increasing with more potential customers who want to sign up to a bootcamp, which should drive even more stronger adoption within conversion. So I think the fact that Palantir's name is blastered throughout all the media and everyone's talking about them and they're pitched as this like big AI behemoth that can really transform the world, that naturally should get a Fortune 500 CEO or, a regular company that's trying to, or a developer at a company that's trying to pitch a Fortune 100 company or a Fortune 1000 company on using Palantir. In order to create that evangelism, there needs to be more media attention. And Palantir has had plenty of media attention in 2024. I think it will compound in 2025, particularly because Alex Karp is releasing a book, which is he's gonna go on a book tour. There's gonna be a lot more engagement. More people will know about Palantir. I think from that perspective, that on a marketing angle can help them get more inbound. More inbound means more conversions. More conversions mean more top line revenue growth. And hopefully that gets us to 40% growth. Fifth, LLMs are being commoditized. It is that simple. We are in the very beginning of making LLMs useful, and most enterprises are realizing why an ontology matters. We've talked about this for the past year now, that the LLM doesn't matter. Anthropic, OpenAI, Gemini, Meta's Llama, all of these LLMs, as valuable as they may be and as strong as they may become, right now we're on GPT-4, maybe one day we'll be at GPT-15, they are not the answer. They lose a lot of money. They don't have a business model behind them. You can't just throw it into an enterprise. That's not how it works. And consumers are not willing to pay 20, 30 bucks a month for something that they can get for free, because all of them at the end of the day are going to get as good as each other, which means they're going to be commoditized. I mean, even Elon with XAI and Grok. I'm not saying there's not any value to GPT. I use GPT every day. I like GPT. It's become part of my daily routine. However, it's not like there's hundreds of thousands or even millions of people. However, that doesn't mean it's a sustainable business model for them to charge me 20 bucks a month. And there will be a price where I'm not going to pay, right? 20 bucks a month is like, all right, I can handle that. But at some point, I'm like, no, I'm just going to go to the competitor. And we know this in the OpenAI's numbers. They're losing 5 billion bucks right now, right? And they're growing really nicely. I think they're going to do 12 billion of revenue next year. But if you're not profitable and all the money is being spent on training the models and inferencing, then it begs the question, how is this going to be a sustainable business model, especially in the context of the enterprise? The enterprise is really where all the money is going to come from, in my opinion, when it comes to AI adoption. And the promise of enterprise AI is margin expansion and efficiency. That requires an operating system, not an LLM. This has been Palantir's dirty little secret for the past couple of years that the street pretty much figured out as Palantir got more attention, which is that you need an ontology to connect all of the data inside of an organization to then operationalize the LLM in a meaningful way. And to me, that's pretty indisputable. I think for people that still don't understand that thesis, they don't fully understand Palantir yet. If you believe in that thesis, then more and more companies should be integrated into Foundry, and that should allow them to scale average revenue per customer by then upselling them on AIP, which is built on top of Foundry, and that leads to LLM adoption actually mattering. I think over the next decade, LLMs will matter, like a lot, but the business models around the foundation model companies that are spending all the billions to NVIDIA to buy the GPUs to then train on these models are going to matter less than the software applications built on top of those LLMs that are going to be sold to hospitals, to banks, to insurance companies, etc. And that's where I see Palantir's TAM ultimately going. So the last thing I'll say right here is that Palantir has no debt. They have $5 billion in cash, or almost $5 billion, $4.6 billion, free cash flow of $1 billion plus, institutional ownership above 50%, GAAP profitable, 40% growth is what takes this story to the next level. They have a charismatic CEO. They have leadership that actually cares. They're understanding marketing. They have these boot camps. Everyone wants to be associated with Palantir. Like, they are in a very good position. They have plenty of capital. What takes the story to the next level is breaking above 30% growth. And again, I don't think they're going to guide for 40%, but these are my theories on how they can get to 40% growth ultimately. Now, what does this mean for the stock? Because I know a lot of you guys are probably thinking, all right, so we get your thesis on why they can get to 40% growth, but what does that mean for the stock itself? By the way, put in the comments, if you got to this part of the video, about if you actually think they can get to 40% growth, because I'm very curious, if people think they can achieve that in 2025. Also, quick note, I'm sorry about all the bots in the comments. I don't know what to do about it. Like, I tried manually deleting the comments. I know it sucks because people want to read the comments and there's all these bots. I don't know what to do. Like, maybe if anyone has any software you could recommend, maybe I'll try to find something externally, but YouTube's not solving anything. I spend time deleting them, but then 500 more comments pop up. So I'm sorry about it. Hopefully you can just scroll through and find the right comments, and it is what it is, but hopefully YouTube can figure that out soon. Okay, so what does this mean for the stock? Well, here's what I think. We haven't had a real market correction yet. If we do, and Palantir is able to show max pain of around 60 bucks, that is really bullish. I know Palantir's at 65 and we fell from 85. To me, that's not like a real correction yet, because the entire market's taken a little bit of a breather as we are about to get a new Trump administration, as we are selling off going into January, people taking profits, etc. If the market actually falls 10 to 15% from here, and Palantir can hold the 60s, which is going to be tough, but let's say it happens, it only confirms my thesis that the big guys are controlling this name now and they are not letting it head lower because they want to buy on dips. Could Palantir go below 60? Sure. But could it go below 50 or 55? Sure. My point is, if they can hold 55 to 60, even with a market correction, given Palantir already is down from its very highs at 85, that's very bullish because it's actually holding a pretty strong range. And even the valuation at 55, 60 is still pretty strong. The multiple you're giving Palantir is still pretty strong. So I think consolidation at that level is not the worst thing in the world. Second, if the market does pull back hard and Palantir gets into the $40 range, the bears will laugh and, they'll be saying, haha, we told you it was the worst thing in the world. Many of which, will still never have got into the name or got into the story. The bulls, which a lot of us will still be in the green because we were here so early, I think are going to buy that dip. So to me, $40 absolutely is a buy the dip on Palantir. I think it will be very hard to see the 40s, but no one knows, what's going to happen. And everyone that I know who understands Palantir is not scared to add in the $40 range. We talk about it on Palantir Weekly all the time, that if we get to $40, 45, $50, most people feel Palantir at that point is trading below its intrinsic value if you assume 35 to 40% CAGR in terms of revenue growth. And given how fast it ran from $40 to $65, it was kind of, 20 to 40 took some time, 65 to 80 took some time, 40 to 60 happened almost in like a couple weeks. It was insane. I think most people didn't get a chance to add to those levels, and we wouldn't be afraid. I definitely wouldn't be afraid to get a chance to add to those levels again. So, in summary, we haven't had a real market correction. If we do get one and Palantir holds 60, that's amazing. And, this is assuming we get to that 40% growth by 2025. And if the market does pull back hard and Palantir gets back to the 40s or 35s, which again, I don't think is really going to happen, but you never know what happens, I think that's a dip to buy. Now, if we get to 40% growth, I'm not saying that it completely justifies the extended multiple we are trading at, but that's not really going to matter. There's not other software names that are compounding at 40% that are actually making LLMs meaningful in an organization. We talked about the fact that OpenAI is worth $150 billion and they're losing money. Palantir has Foundry, AIP, Apollo, Gotham, and Warp Speed, which is their newest software offering, and they're expanding profitably into multiple verticals. So I think the street's going to pay a strong multiple if they can get to 40%, as no other AI name will be left that can show that type of trajectory for growth on top of the government business that has massive tailwinds as well that we talked about. This means the name will be the most expensive software name probably forever, but expensive is not a bear case. And if it is, then most people likely will never get to own Palantir if they're going to stay away from it simply because it's expensive. Now, if we get 40% growth and the stock stays flat, or slightly down this year, then that just means the street is consolidating in the 60 to 80 range, which I think is bullish. It gives the stock the ability to grow into the valuation. I think a lot of people probably would be confused if we run up to 150 for no reason. A lot of people would also be confused if we tank all the way to 30. So I think a consolidation between 60 and 80 with 40% revenue growth is going to be really healthy for the stock to be able to get and justify the multiples that we're currently getting right now, even if it would still be expensive. And it then opens up the ability for multiple expansion if they can continue to execute in terms of that growth. A flat year wouldn't be awesome. I get it. Most people would would be a little upset, especially if you bought it $80. But a lot of the OGs of Palantir have been in this name for a very long time. We're up more than 10x from the lows. I mean, at one point we were at $6 on Palantir. I think the lowest was $5.84 in December of 2022. And a year of consolidation versus a 50% decline, which, happens to names all the time. Tesla, Nvidia, Amazon, all of these guys have fallen more than 50%. We kind of had that back in 2021 with Palantir. Granted, the whole market fell. Palantir independently, outside of the market, has not had a massive, massive correction. So I think a year that provides an opportunity for more share accumulation, along with that 40% growth, to me is very exciting because it only means that while the street is getting more friendlier to the name, we saw Morgan Stanley, UBS, all these guys start to issue better price targets. And while the stock is developing a base, a strong foundation of support and growing into the extended valuation that we're in, I think that's a really strong 2025. You're not going to have every single year where a stock goes up 400%. That's just not going to happen, especially when Palantir is up from $6 to $80, right? We have obviously shown the story to Wall Street that it is a real company, it's a real business, it's not a black box. Retail knew this before Wall Street. That's why Wall Street is paying a premium, because they're starting to recognize what retail knew at $6. Retail at $6 knew this thing was never going to be stuck at $6. Wall Street thought this thing was a black box consulting firm that was never going to expand probably past $20. Retail was right. Wall Street was wrong. Wall Street's paying up a ton of money. Now, in order for Wall Street to not dump it, because the part of Wall Street that is beautiful but is also sad is that as quick as they will buy it, they will sell it just as quick. And so now, in my opinion, it is really up to Palantir to show the earnings growth that is necessary to justify current valuation and then ultimately expand that valuation going into the future. Again, I don't think they're going to show 40% growth guidance in Q4. If they do, bullish, like really bullish, like because, you tend to sandbag and then work your way up. If they start at 40%, do we end the year at 45%, 50%? I mean, is it that type of a year for Palantir? Or do they start at 30, get to 32, 35, maybe end the year at 37, maybe 40? Or do they guide for 26% growth and end the year at 32 just to be able to say they catered at 32, but they kept expectations low at 26? We're going to have to see. In future videos, I'll talk about the implications of what it means on the stock. If they guide 40%, I think the stock really gets some momentum. If they guide below 30%, I think there could be a dip. So we'll talk more into the future in terms of what I'm thinking about how the stock will react, particularly on earnings day. But in general, I think there's a shot we can get to 40% growth. I think the story is just beginning. I know the stock has run up a lot, which makes it a little complicated because if Palantir was trading at $30 right now, $35, which still would have been more than a double from where it was in January 2024, it would be much easier for me to be like, all right, if we have this type of growth, then yeah, we can probably get to the 40s or the 50s or maybe 45. The problem is we ran all the way up to 80, which is a beautiful problem. And now we're back at 65. And the sort of narrative on how we should expect returns on the stock has changed. And we all have to be humble to kind of recognize that, all right, so it ran up really quick, primarily on the story and Wall Street getting excited, but not really earnings growth yet. So now we have to show earnings growth. And that is going to be sort of the nuance of this year in terms of how we navigate understanding Palantir. All right, that's it for me. Thank you everybody for listening and watching. Let me know in the comments if you think Palantir can actually get to 40% revenue growth. I think it is very, very possible. I think it'll take some time to get there. But if you believe the story is just beginning, if you believe in the promise of Foundry, if you believe in AIP, if you believe Palantir has the $1 trillion vision, which I do believe over the next 10 to 15 years, there is a shot Palantir can scale to get to that $1 trillion market cap, then this is the story you believe in. And this is why I'm happy to keep holding on to Palantir, covering the story, and believing in their message and their ambitions to really, quite frankly, be the most important software company in the world. I mean, again, I know Palantir hasn't had any PRs this year, so we haven't had to, cover any new deals they've had. And, they're probably coming in 2025. It's only a couple weeks into January. But every time they issue a press release, you remember, holy crap, like this is a real company that's doing some very, very, very complex things throughout the world. And the world is just beginning to understand what's happening with data, definitely just beginning to understand what's happening with AI, and the amount of demand that exists from governments, not just in the United States, but across the world, and corporations, enterprises that need some level of sophistication in terms of managing their data and then making that data useful, accentuating the possibilities and potentials for them to actually grow their business by using that data. It reminds you that, yeah, Palantir is very, very early in the story. And if they can grow, then the street is probably going to reward them. All right, that's it for me. Thank you, everybody. I'll see you guys in the next episode, and let me know if you think Palantir can get to 40% growth. Bye, everyone. Have a good one.